Motley Fool claims they know a tech stock worth 40 Amazons, and I reveal the stock here so you don't have to buy their newsletter. Just understand that no paid or proprietary info is given away here. It's all guesswork based on clues in the presentation. Before we do anything, let's look at some recent publicly available stock picks from Motley Fool to see if they're trustworthy. They recommended Arista Networks, calling it Microsoft's new AI weapon back in June 2024. The stock was doing well before crashing like most tech stocks this year. However, it's still up overall. Also in July 2024, the Fool recommended Shopify and claimed it was their first ever 9x buy alert. The stock has done well since then. In August 2024, they recommended ASML, and this one hasn't done all that well. The Fool recommended Lincoln Electric in November 2025, and the stock hasn't done well yet. In the same month, they recommended BWX Technologies, and this stock had done well the last few years, but this was a bad time to recommend it. Alright, let's shift back to the new ad from Amazon and see what they mean when they say, this tech could be worth 40 Amazons. They start the ad by saying, Amazon's Jeff Bezos surprised investors when he revealed that one emerging technology is the key to Amazon's future success. In fact, Bezos argued that it's hard to overstate the impact of this game-changing technology. And they continue by saying, back in 2017, legendary tech analyst Cathie Wood, CEO of ARK Invest, wholeheartedly agreed, echoing that this opportunity could present a 17 trillion opportunity by 2037, roughly worth 35 Amazons. And now the Fool claims Woods is saying this will be worth $80 trillion, which they claims is worth 40 Amazons, 25 Microsofts, 30 Nvidias, 41 Alphabets, and 359 IBMs. It's pretty obvious that the Fool is just talking about AI in general here, and they eventually reveal that this is indeed what they're talking about. They say, what's more, this $80 trillion is not tied to any single company. Rather, it's an unprecedented leap forward, detailing the total addressable market of AI. The Fool is pitching a company that's very important to AI, though. And they say, and if you're an investor, I haven't even told you the best part. Because one remarkable company is the backbone of this entire industry. In fact, according to The Verge, manufacturers pushing this magical technology forward are wholly dependent on this one tiny company. I actually found the Verge article the Fool is talking about, and in it they claim the world is wholly dependent on ASML. So that's the stock being pitched here, and the ticker is also ASML. ASML is critical to the AI industry because it provides the advanced lithography equipment needed to manufacture the world's most powerful semiconductors. These chips are the backbone of AI systems, enabling the complex computations required for machine learning and deep learning algorithms. ASML's extreme ultraviolet EUV lithography machines are essential for creating cutting-edge chips with extremely small transistors, which allows for higher performance and energy efficiency. Without ASML's technology, chip makers like TSMC, Samsung, and Intel wouldn't be able to produce the high-density, high-speed chips that power AI models like ChatGPT, autonomous driving systems, and advanced data centers. Here's everything you need to know about this company, and after I'll tell you if I'd buy. First is the sole supplier of EUV lithography machines. ASML stands alone as the only company globally that produces extreme ultraviolet EUV lithography machines. These machines are essential for manufacturing the most advanced semiconductor chips, making ASML an indispensable player in the tech supply chain. Second is riding the AI wave. The surge in artificial intelligence applications has led to increased demand for high-performance chips. ASML's cutting-edge lithography technology is crucial for producing these chips, positioning the company to benefit significantly from the AI boom. Third is strong financial performance amid challenges. In the first quarter of 2025, ASML reported net sales of 7.7 billion euros and a net income of 2.4 billion euros. Despite a sequential decline from the previous quarter, the company maintains a positive outlook, expecting total net sales between 30 billion euros and 35 billion euros for the year. Fourth is geopolitical headwinds and tariff concerns. ASML faces uncertainties due to geopolitical tensions and potential tariffs, particularly from U.S. policies affecting exports to China. These factors could impact future orders and revenue streams. Fifth is high barriers to entry protect its market position. The complexity and cost of developing EUV technology create significant barriers for potential competitors. ASML's established partnerships and technological expertise further solidify its dominant market position. Sixth is stock valuation reflects growth potential. As of now, ASML's stock trades at a forward price-to-earnings ratio of approximately 24. While this may seem high, it reflects investor confidence in the company's growth prospects and market dominance. Seventh is customer concentration risks. A significant portion of ASML's revenue comes from a few major clients like TSMC, Samsung, and Intel. Any changes in these relationships or shifts in their investment strategies could impact ASML's financial performance. Eighth is limited exposure to consumer market fluctuations. ASML's primary business is selling equipment to chip manufacturers, not directly to consumers. This focus provides some insulation from consumer market volatility, though it still depends on the overall health of the semiconductor industry. Ninth is commitment to innovation and R&D. ASML invests heavily in research and development to stay at the forefront of lithography technology. This commitment ensures the company continues to meet the evolving needs of chip makers. Tenth is long-term growth prospects remain strong. Despite current challenges, the increasing demand for advanced chips in AI, data centers, and other applications suggests robust long-term growth potential for ASML. Analysts remain optimistic about the company's future performance. In the past, I've recommended that people stay away from ASML because it was too overpriced, and my analysis was correct, as the stock has lost about 20% in the last year. However, I'm changing my tune and now believe ASML is a buy. While it's still expensive, it's much more attractive at current levels. There are still things to worry about, though. The chip market is cyclical, and if demand for chips plunges, the demand for ASML's lithography machines will drop as well, potentially dragging the stock down with it. However, I believe in the AI revolution and think it will impact the world as much as the internet did. I don't think we've even begun to scratch the surface of what AI can do, and if AI keeps growing, so will chip demand. Self-driving cars, improvements to LLMs, and other advancements position ASML nicely for the future. There will likely be bumps along the way, and a worsening relationship between China and the West could present challenges, but I believe this stock will do well in the long term. And if you'd like to see more Motley Fool stocks, click the videos below. The video on the right is a stock the Fool claims is as good as buying Nvidia at around $1, and on the right is 5 small companies with 500x potential.